investing in equity funds such as large cap, mid cap, and small cap, how do you decide the right allocation? Is it better to play it safe with large caps or chase high growth with small and mid caps? The truth is, one size doesn't fit all. So, our financial expert, Mr. Ramalingam, is here to explain it all in this video. So, Mr. Ramalingam, over to you.
When you are investing between large, mid, and small, what we can actually do is, though you invest in flexi cap, though you invest in multi cap, or you can invest in standalone large, mid, and small, internally see what is the overall allocation, put together all the schemes, how much is allocated in large cap, how much is allocated in mid cap, how much is allocated in small cap. If you want to be a conservative investor, then investing more in large cap tilted portfolio can help. If you want to be an aggressive investor, then investing in a small cap tilted portfolio can help. But moderately, if you want to keep it, keep 1/3 in large, 1/3 in mid, 1/3 in small cap.
Okay. What is your advice? If I have 100 rupees, what type of percentage by which, for example, I am saying, if it's 100 rupees, large, mid, small, or flexi, what type of percentage this could be apportioned?
Sure. Generally, 33%, 1/3 can be invested in large cap, 1/3 can be invested in mid cap, 1/3 can be invested in small cap.
Okay.
This allocation is not something hard and fast rule. It is just a thumb rule. It can be customized based on your requirement. Suppose like you want to, completely enjoy your financial freedom, don't want to take all these things in your head. You are kind of retired and you have enough money. Then in that case, investing more in large cap and staying peacefully can help. Suppose you are comfortable, extremely comfortable with volatility, and you understand the market cycles, business cycles, recession, boom, then in that case, investing more in small cap can also help. It depends upon your nature, your requirement, your risk appetite, your time horizon you have got. So if 1/3 is given in large, mid, and small, what is more important is restoring this asset allocation. In 1/3 you are investing in large, mid, and small. Then subsequently, after 1 year, let us say a year like 2023 or 24, small cap was delivering extremely good returns, like 30 to 40% returns. So at the end of 1 year, if you look at it, it will not be 33%. Because small cap has overgrown, it may be something like 30-30-40 or like 25-25-50 in some cases. So in such a situation, we have to readjust it back to 33, either by withdrawing from small cap and putting it in large and mid, or like stop additional purchase in small cap and invest more only in large and mid cap to bring it back to the desired allocation. So that way, if you look at it, what can happen is in 2023-24, small cap was overgrowing. So for all our investors, we have asked them to do the asset allocation rebalancing within small cap, which really helped during this 2024 end and 2025 beginning market volatility and uncertainty, tariff war, and Indo-Pakistan war that has helped. Small cap had the worst hit. In fact, large and mid cap has recovered from the fall. Small cap still, like there is 10 to 15% gap is there. Because we limited small cap exposure in 2023 and 24, our investors got benefited there, right? So when you are doing large, mid, and small, having your own fixed allocation, I gave you an example of 33%. It can be different for you, but based on your risk appetite, if you fix a ratio, stick to it. Review it once in 6 months. When there is a huge imbalance in the market, quickly rebalance it and restore to your original ratio. That will help you reduce risk and optimize your return.
Thank you for your detailed answer. If you have any doubts regarding this or any other financial decision, don't hesitate to book an appointment with our financial experts. The link to the appointment is given in the description below. Also, would you like to know more about finance and investment? Then we would recommend you to attend our live webinar. Link to the webinar is given in the description below, and the webinar is absolutely free. So if you like this video, hit like, and if you're new to our channel, please do subscribe. Thanks for watching.